At the end of the day, there isn't enough money for guns and butter. There isn't enough money for, cheap housing and cheap energy. Nothing is cheaper than Russian pipe gas. Net zero is not going to work. Oil consumption in general is going to continue rising. Well, I don't think that at all. I think oil's already too low at $83 a barrel. I think it's just basing. Uranium is coming back into the mix because they have no other choice. Copper is your canary in the coal mine. Copper is still Dr. Copper. It's still your leading indicator of industrial demand for electricity demand. So yeah, you want to be long uranium? Well, we're going to need copper. Yeah, nuclear's coming back. Uranium prices are cheap.
All right, Tom. First of all, thank you, of course, for joining me today on a very warm, Florida. What's the temperature over there?
I don't know, but I know it's hot. It's probably in the high 80s. It feels like 95 or 100. It's terrible, and I'm on my porch because I love doing these with a cigar, even though I should probably be inside in the air conditioning so I don't dehydrate. But it is what it is.
Well, you typically get heated up in these conversations that you and I have, so you might have to move eventually inside. I always enjoy our conversations, and I always appreciate your different field of view. And today, I actually want to first I want to get an update on how you generally see geopolitics, macroeconomics as every time, and but the most important thing, more importantly, how it all ties into the energy markets because of really because of a headline that this week that I saw that the euros sharing the global cross-border settlements via SWIFT has hit an all-time low. So
Yep.
and you said something about that on Twitter. You said that it had something to do with sanctioning Europe's largest energy supplier. Who would have
Sure.
thought? So talk to me about that.
Well, I think I actually was the first person to mention this in public that the euro lost significant market share over their sanctioning Russia. That from 2021 to 2023 they lost cross-border settlement as measured by SWIFT dropped from the mid 30s percentage wise to in the teens, and it's part of the reason is because I've been subscribed to the SWIFT RMB tracker, which is where this data comes from, since the day it went live, like 12 years ago, 13 years ago. Um, and so I check in with it every once in a while to see what's going on. And I took one look at it and I went, yeah. So so I wasn't surprised at all because what happened? Putin immediately, after all the sanctions went into place and they tried to destroy the ruble and everything, he turned around and said, "Look, all unfriendly countries have to, that by their definition, have to, pay him in rubles or gold." And we made a big stink about it on Twitter, a year and a half ago, 2 years ago when it happened. And the consequence of that, of course, is that the euro is not settling that trade anymore. The Europeans have to convert their euros into rubles and then settle in rubles. Now, at the end of the day, um, is that a kind of a convenient fiction? Sure, but none of that money is going through SWIFT, and none of that money is and none of those euros are being deposited in people's accounts outside of Europe, right? And so what is the so it becomes more of a it's another, what's the word I'm looking for? The way of putting it, it's another marker that Zoltan Pozar was right when he wrote about it's now our commodities your problem as opposed to our dollars your problem or our currency your problem world, and that's where we are today, and that's only that part of the process, and that aspect of the process isn't reversing all of a sudden, and it wasn't a temporary thing. It's now a very much a it is a temporary thing in the long run, but in the short term, it's absolutely a permanent fixture of our investing environment for any actionable time frame. How long this is going to take for commodity producers to be put back in the box where they're the price takers as opposed to the price makers. It's a good question. I don't have a good answer for that. I don't think anybody does, and anybody who tells you that they do, well, I would salt that to taste, frankly. It's just simply because these are concepts that no one has a real good handle on, the complexities of this.
Hmm.
But as for right now, commodity producers like Russia and I got news for you, the United States, since we're the largest producers of oil in the world right now, you know, we it's there are commodities and they're your problem, and how you pay for them is your issue, not ours. And that's part of the reason why the dollar has been as strong as it has. It's part of the reason why the the Russians are able to make more money, even though the price of oil seems to, every time it tries to break out into the upside in dollar terms, it seems to get squashed back down by somebody. I'm not sure who that person is. Well, I'm of course playing dumb here. We all know who this is. And but it's going to just continue to play itself out over time as the world breaks apart into economic blocks. And I think
Mm.
that's the bigger story that's really at play here.
So is this good? You and I have talked about this over the years, weaponization of the currencies,
Mm-hmm.
weaponization of commodities. What's the primary thing now? Like what is getting more weaponized, if you will? Is it energy or is it money?
It's both simultaneously, right?
Mm.
But the money weapon, but the way I would put it is, and I'm just riffing off of stuff that I learned from Jim Sinclair 18 years ago or 15 years ago, which is that once you shoot your biggest weapons, you don't have anything left to shoot. And they've already shot their wad on ruinous sanctions, removal from the SWIFT system, can't do business in dollars, can't do this, can't do that. What else is there? Like now they're down to, I don't know, sanctioning some third-rate oligarch that, has a little bit of money in a Cypriot bank account. Like this is what we're down to. And you think this is going to change the dynamic of currency flow around the world? It's going to meaningfully impact commodity prices? You're out of your mind. Of course it doesn't. So um, at when you factor it that way, as of right now, commodities they don't have to be weaponized. They just have to be properly accounted for, right? Their pricing has to properly be accounted for in the, all things considered, all in sustaining cash costs um, as we extraction guys like to put it, right? Everybody has an all in sustaining cash cost. Well, for a long time, when the business model couldn't sustain itself because of money being too cheap and the risk of the exploration and everything because of low interest rates, papered over a lot of those risks. Now we're in an interest rate rising environment where all those costs have to be borne, and everybody has to make a very, very difficult choice as to how they're going to spend their money and how they're going to invest that money in new projects. And this is why it's both a blessing and a curse to the extraction industry, and be it oil extraction or coal or copper or molybdenum or anything else. But it's because at the end of the day, there isn't enough money for guns and butter. There isn't enough money for, cheap housing and cheap energy, right? At the end of the day, you have to make a choice between one or the other. And you can't subsidize housing costs, or actually, more appropriately, rising housing prices and cheap energy. You can't account for both, right?
Mm.
So you can't make the financing cost for pulling oil out of the ground cheap at the same time making it easy for people to lever up the price of their house because they're only paying 2 or 3% on their mortgage. Once the mortgage rates go to 7% and the credit revolvers for the oil drillers goes to 6% or 7%, you have to make a choice because the consumer is not going to be able to afford $90 a barrel oil, but the producers want to pull it out of the ground for that, and they can't, and the producers can't, pull it out of the ground for 60 and make money. They got to pull it out of the ground for 80 because they got to, throw another $20 to the bank in order to pay for the difference in interest rates that they're paying on their exploration costs and their transport costs and everything else. And so this is where you get into that classic, argument about what does interest actually do? Well, interest is there to force choices on people between, weigh the opportunity cost between two different investments, what to do with their time, which is, denominated in terms of money. And when we're at the zero bound, every dumb idea imaginable is subsidized. And when you're at 5.5% on the dollar, and then forcing everybody else to go back, up into the 3s and 4s or 5s or 6s or 12s or 20s or 30s, depending on where you are in the world, that's when everybody gets, frankly, they get religion, and all of a sudden they're going, well, I can't do all of it. And what does that do to government budgets? What does that do to fiscal policy? What does that do to political stability? Blah, 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 blah. And so that's where we are. And so I don't know that it's being weaponized per se. If anything, interest rates have been weaponized. And I thought, and the reality is, I think that interest rates being sent to the zero bound was the ultimate weapon. And now that that weapon has been spent and no longer has any ability to continue to subsidize fraudulent marketplaces for a whole lot of things, the bills are coming due.
Hmm.
And then everybody's screaming at the other guys, trying to drink each other's milkshake. I'm like, no, you already drank all each other's milkshake. There ain't no milkshake left. Now it's just a bunch of people standing around going, I'm still hungry. Oops. Who's got the food? Who's got the oil? The people who are hungry are going to have to go hungry. And I mean that. I mean hungry in a monetary sense.
Well, hopefully not in a literal sense. But in the end, it seems like Europe is going to get rug pulled again here, because what's happening is that Powell, as far as I understand what you're telling me here, what I'm writing down is that Powell is defending his currency by raising interest rates, making it more, pushing energy prices higher, so oil and whatnot going higher because the ASIC goes up basically, and that makes it tougher for us who are net energy consumers, as opposed to net energy producers. And so big boys can keep fighting, but we get rug pulled over here in Europe.
Well, it's because you made the mistake of cutting off your gravy train. The Russians were more than happy to sell you oil and gas for, on a cost plus model. Putin offered it to you multiple times, or to Europe multiple times. And in March of 2022, everybody went, no, we don't want it. But they were laying the groundwork for this for years. I wrote about this for a long, long time, well before you and I ever first started speaking. And just to give you an idea, I mean, I talked about Europe and their arrogance, thinking that they were Russia's only buyer, and that gave them market leverage. Like, everybody talks about monopoly pricing because we've all been inculcated in Marxist Keynesian dogma that that the thing, the fear in the world is monopolies, and that, oh my God, the big bad corporations are going to keep us from, are going to raise prices and make us all poor. Well, there's another problem on the other side, is that there's also this argument about monopsonies, and that you create markets where there's only a single buyer, and that forces the cost of the buying back onto the producer and forces him to accept whatever price that the buyer wants. And this is what Europe did all throughout the 2010s with the third energy package and everything, all the wrangling over how the Nord Stream 2 pipeline was going to get paid for, and the shenanigans around the Ukrainian gas transit contract back in 2019, and South Stream, and all of this stuff. It's all was about Europe trying to tie Russia into gas and oil supply contracts that were below Russia's cost of production. And Putin was like, I'm not doing that. I will happily sell you stuff at lower than market value, but I will not sell it below the cost of production. And Europe said, no, we want it cheaper than that. And we're your only buyer. So what are you going to do about it? And Putin said, that's nice. I'll sell it to China. I'll sell it to Turkey. I'll sell it to these guys. I'll sell it to those guys. And that's what they did. And Europe found themselves in a position to then have to throw a hissy fit and try and use financial nuclear weapons alongside the United States. And this is where I disagree with people who think that Europe is a bunch of satraps, taking orders from the United States on this. No, I'm sorry. They didn't. They walked into this willingly. And they expected the United States to roll over and give them the same deal that the Russians were offering them. And the United States was like, no, because you're trying, no, we're not doing it. And it's your own fault. You trusted us to, frankly, you trusted us to sell you liquefied natural gas from Cheniere at, below market value, and to replace Russia when we have a cost structure that we can't afford to do that. Like, nothing is cheaper than Russian pipe gas. Right. For Europeans, nothing is cheaper. There is no cheaper energy source other than maybe Norwegian pipe gas, or previously Dutch pipe gas coming out of the Groningen field. Right. Those days are gone, or they're mostly gone. Chenier's got to pull it out of the Wildcatters and Permian are going to pull it out of the ground, pull the gas out of the ground, transport it 1,000 miles down to, or 500 to 1,000 miles. Remember, America's big, folks. You guys all forget this when we start talking about, electric vehicles and why we know nobody needs a pickup truck and all this other stupid crap that comes out. Okay, well, now I'm going to get my dander up. Like all this stupid crap about, how we don't need cars and we also live in 15-minute cities and eat bugs. I got news for you. Everybody who thinks that needs to come to America and drive across Texas or start in Key West and drive to Tallahassee and realize that halfway through that trip, you'll probably have to stop at a hotel room. Okay. And you haven't even left the state of Florida yet. Forget the fact that you're going to go to Texas. So now think about the cost structure of trying to pull the gas out of the ground, pipe it 1,000 miles down to Louisiana, where it then has to be liquefied, put on a ship, transported 3,500 miles across an ocean, and then regasified in Germany. I do think you're going to get that for the same price that you get it from the Russians piping it 600-800 miles or even 1,000 miles. I mean, the fields, the gas fields off the Barents Sea, or are you out of your mind? That transport is only slightly larger than the first leg of the trip that the American gas makes in the first place to hit the LNG export terminal. And there's Macron 2 years ago screaming about how the Americans are rolling them over a barrel. I'm like, no, you shot yourselves in the foot, and they're complaining that that we sold you the gun. No, excuse me. You bought the gun. You built the gun yourself, shot yourself in the foot, and now we're complaining that everybody else, won't fix your friggin' wound. This is the scenario. And I sit here and I look at this stuff and I'm like, no. It's just crazy. It's just crazy talk. And this idea that that's pervasive, that, this is another talking point that's going to come up again. And they're going to tick a lot of people off. History didn't start in 1947 when the American Empire officially started. Sorry, didn't. Modern history, this is all a continuation of 500 years worth of colonial business model practices where, people like the French have been, strip mining Central Africa for 350 years, getting their raw inputs to their economy for less than a penny on the dollar. And then are, now complaining that they got to pay 25 cents. Sorry, just wait, keep it up, and you're going to wind up paying market price. I don't know what else to tell you. You had an opportunity. I mean, you metaphorically being Europe, your
Sure.
leadership let you down in the same way that my leadership is letting me down over fiscal policy and over, energy policy and everything else. Because what they're trying to do is actually give the Europeans, these feckless European communists, what they want, which is egalitarianism on the global trade stage. And we're like, no, we have comparative advantages. You have comparative advantages. I'm not sure what they are at this point, but you have them. Why don't you leverage those and do what you need to do? You don't see the Japanese complaining about paying $20 $20 an MCF for liquefied natural gas. You don't. They go out, they do it, they spend the money, and they turn it into devaluated goods, and they work, and then on the backside they work the inflation however they can. You never see the Japanese complain about energy costs. They just react to it as best that they can based on their situation. And you can generally, for example, figure out what Japanese policy is going to be based on their energy input costs. Right now, they have to strengthen the yen and allow their bond market to rise, to their bond yields to rise, in order to stave off the incipient inflation from energy prices having risen. Because the carry trades are now there's nowhere else to stuff the dollars and the euros and the yen onto people's balance sheets anymore in the form of U.S. Treasuries. Everybody's levered up too far, so now all the bills have to come home to roost. I know I'm kind of jumping around here a little bit, but to remind everybody, this is the weird world that we created with 12 years worth of zero bound interest rates. Okay. And that is being reversed. And the TLDR on this is that's being reversed, and everybody now has to start paying their bills. And they have to start paying real prices for those things that are real, that ensure that their economies operate. And you can either complain about it and still expect to get a deal, or you can accede to reality and, start dealing with the problem. And we still have too many people who are, thinking that they can wheedle some kind of political leverage to get what they want. And they've run into, frankly, in the face of the Russians, they've run into a brick wall. They've said, nope, screw you, pay me. And with
It
good reason.
it is all by, or at least it seems like it's all by design, though. I mean, it's not like we
Mm,
don't have natural resources in Europe. It's not
right,
like Germany didn't have the nuclear energy infrastructure to
right.
keep energy cheap. Like as you mentioned Groningen. Well, you tried at least mentioning it. You butchered the name a little bit, but
I'm
I'll
sorry.
forgive you. I'll
I'm not,
forgive
I
you.
don't speak Dutch. I'm sorry.
I'll forgive you. No, I'm just kidding, of course. But we have beautiful gas fields, right? There are solutions to this. My
Mhm.
question is, are those solutions ever going to get utilized? What's your take?
Not while the European Union is operating as it's currently constituted. No,
Hmm.
you have to um, y'all have to reject the siren's call for quote unquote. We need bigger economic blocks to fight other big economic blocks. That's all a lie. It is just a lie.
Hmm.
Um,
Well, haven't you heard
and
the
what's that?
solution to government? I was going to say, haven't you heard the solution to government is always more government?
Oh, yeah, I know. I've heard that a couple of times in my life. Not sure I agree with it, but I've heard it. It's a nice little story that people tell themselves as they cry themselves to sleep at night. While they can't heat their house or air condition it in the summertime.
Hmm.
It's not my problem. Or run their factory or whatever it is.
Hmm.
So sorry.
Yeah. But is this a well, if you don't think it's going to get solved the way that the EU is built right now, does that mean that this is going to be a sort of a permanent tailwind for the prices of energy commodities?
No, it's going to be it's oh yeah, tailwind. Yes, absolutely. It's not going to be a headwind. It's definitely going to be a tailwind on commodity prices unless everybody, comes to their senses and calls off World War III and allows the 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 gas and the oil and everything else to flow. But right now, what we have is an overly complex system that's being purposely made even more hideously complex for the purpose of allowing it of creating the tipping point where it all falls into crisis, but they need an external reason to justify why the world they created is going to come to fruition. I.e., that means that we need a war. So we need a war to justify why the economy is collapsing, why there are shortages, why there's this, why there's that, and why we have to cancel all the debt and and hate Russia and hate the Chinese in perpetuity. It's all nonsense. It needs to stop. It actually needs to stop. And at some point, the grown-ups just need to walk into the room and say, "That's enough. We're done now. Please stop." And I don't know that there are any grown-ups uh, at the uh, at the leadership level of the European Union. But I can tell you that what's interesting is that the amount of histrionics that's happening um, in order to try and stop a populist wave from occurring within the European parliamentary elections next month. Not that the EU Parliament has any legislative um, power, but they do have the power to pick some of the leadership. And if the wrong parties, quote unquote, get into power, then they're not going to be able to maintain the same level of control over EU policy that they've enjoyed for the last 15 years or 15, 20 years while they've destroyed everybody's lives.
Hmm.
That's what they're worried about. That's why we're seeing, these fake attacks on AFD in Germany, and why Geert Wilders was never allowed to organize a government in the Netherlands. I'm correct on that he's still not prime minister, even though he won the friggin' election. And everything else, and every hint of any amount of populism is why Donald Tusk left Brussels to go back to Poland to run against the neocons that were running Law and Justice Party, so that he could run an anti so he could head up an anti Law and Justice coalition. We saw this played out all over Europe, right? This, hey, let's get together, let's get these 9 parties together that don't agree on anything other than getting rid of those guys, and we'll make that the opposition. They tried it with Viktor Orban in Hungary. It failed miserably, but it just barely succeeded in Poland, and sadly. Excuse me, sadly it did. But then again, the Poles didn't really have a good choice. They either could stay in the orbit of the evil British through law and justice, or they could, be subsumed back into the EU under Donald Tusk. This is not a good. This isn't Hobson's choice as far as I'm concerned. It's literally, different types of ritualistic suicide on the part of the Poles. Um, you know, that's the way I see it. And and honestly, the same kind of false choice was put in front of the Germans as well. And the way that election worked itself out, there's no way that you'll see any kind of populism hit Germany, because the minor parties in Olaf Scholz's government are never going to back out of that coalition, no matter how much political damage is done to their reputations, until their term is gone. So the government that they got in 2021 is going to be there until 2026, period, or some version of it thereof. But there will not be, okay, let me put it this way. I would place unbelievably long odds on there being snap elections in Germany at a national level. Okay. These people won't even allow the German states to vote properly at this point. So, but there's a lot going on from that perspective. And, we'll see if there's a thunderstorm in June at the EU parliamentary elections, similar to when Nigel Farage and company won in setting up Brexit, right? When they won in the UK, setting up Brexit. That could be it could be a very interesting time. This summer is going to be very weird in Europe. People are really discounting it. And the more I think about it now, the more I'm like, I haven't really given much thought to the EU parliamentary elections on this front up until very recently, honestly, in the last 24 hours, because I just never, I don't have any respect for the parliament as a legislative body. So I'm like, what does it matter? It does matter in that they do get to pick a part of the EU Commission, I do believe. At least they get to pick, part of the triumvirate of presidents that actually runs the EU. If the wrong party winds up being in power, they can have real, their plans could fall apart. So they're very, very worried about this. Let's just put it that way.
And this is within thinking about energy prices for me. And this next question as well is, what happens if Europe eventually refalls into communism, or at least part of it? Which, I mean, I know you'd argue we're already halfway there, if not 75%. What happens to energy consumption in that case? I mean, deindustrialization in Germany, moving to an app-based economy, and all these things. What happens to energy consumptions?
Well, I don't know, but you still have to heat homes in Germany in the wintertime. You still got to, last I checked, Europe is not at the equator. We haven't had the pole shift yet that flips the planet on its axis. If you believe in that sort of thing, and I'm not sure that I do, but I'm at least conversant in it, right? And again, I dabble and look at all sorts of things that I don't necessarily believe in, but you throw it into the hopper, you put a hypothesis together, and then you play the game, you play the scenarios out. So what you're seeing in Europe is a classic admission that net zero is not going to work. It's already happening. They're buying more oil from Russia than they did in 2022 and 2021 than they did before. So the whole boycotting of Russian oil has failed. And Russian gas has failed. It's coming in through back channels. It's coming in through other means, which is part of the reason why you're seeing, the EU and the U.S. put pressure on China to stop. Now they know. Okay, let me be. I was about to go in not the wrong direction, but I was about to gallop around. Look at what's been happening over the last month, right? Blinken goes to Beijing and tries to shake down the Chinese with some unbelievably ridiculous demands to stop helping Russia prosecute the war against Ukraine. Xi comes to Europe, and von der Leyen or von der Crazy and all the rest of them do the exact same thing. So in order for them to get what they want, they know the price capping of Russian oil has failed miserably. They know they can't stop the money flow into Russia. Russia's trade balance is as good as it ever has been. Its foreign exchange reserves are as strong as they've ever been. Like the Russians are making money hand over fist, and they're using that to fight a war in Ukraine, right? And to slowly grind out territory in the Donbass. They can't stop the money flow into Russia. So now they got to try and put pressure on the Chinese to stop the money flow to the Chinese, to get the Chinese to stop helping Russia build the advanced weapon systems that the Russians have. Now that they still need help building. Like Russia's advanced weapon systems, their optics and their their high single crystal, their high tech single crystal metallurgy and all the rest of it. Still, that stuff is still handled, is still supplied to them from outside sources. They don't have critical mass to do that as a domestic industrial. They're not self-sufficient in these things, and so because they're not self-sufficient in these things, they can't they can't excuse me, because they're not self-sufficient in those things, that becomes a leverage point that the West can use against them. And so because of that, this is the real problem, right? So they're trying desperately to stop the process so that they can get Russia to the negotiating table to stop the war in the short term while they rearm so that they can attack them again later. And the Russians are obviously in every way hip to this. And they're like, yep, nope, not coming to the negotiating table. You guys are not agreement capable. When you put terms on the table we'll actually listen to, like giving us Odessa, getting rid of Zelensky, blah, 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 then we'll listen. Otherwise, see you on the battlefield. And the Chinese are saying, yep, see you at the trade, see you at the auto show. Let's do it. Let's play the game. That's where we are. So oil consumption in general is going to continue rising because we're not seeing a backing off of the growth in, Southeast Asia. We're not seeing a backing off. The more that the old colonial extraction model of the post Bretton Woods, the post World War II Bretton Woods style environment, and now the global reserve system based on the petrodollar, the more that system loses members to buy into it, the more those countries are by degrees going to be freed to develop their own domestic economies, which is of course is going to put upward pressure on oil and gas consumption. It's just going to shift around the world, away from Europe somewhat, and away from some places and towards other places. Like the IEA has never once backed down about if they've ever done anything, and they're highly suspect data source on this, but if they were anything, they would be highly suspect in trying to suppress projected oil consumption. And they keep coming out with new revisions, upwardly revising oil consumption projections through the rest of the decade. But somehow, the world's going to end between now and then, because, we're all going to be living underwater. And, I'm going to have beachfront property up here in North Florida, an hour away from the coast. Like, really? Okay. Then why are you guys buying beachfront property in Maui?
Yeah, that's that old question. Like, if everything's going underwater, why are all the billionaires buying property in Florida, like yourself, soon?
Or more appropriately, why is Wall Street moving to Miami, where all the data centers are? Like, the data centers are all in Miami. Yeah, but Miami's going to be underwater. Like, they're really going to put like all the data centers for all this stuff in Miami if Miami was going to be underwater. Are you kidding? Are you stoned? Like, I don't smoke dope or anything, like, at all. But whatever those people were smoking, I'm like, wow, that's some good shit. Maybe I should consider doing it. Like, interesting.
That's a conversation in and of itself, I think. But in the end, it comes down to long-term heavy tailwinds for energy consumption, energy prices. And when we talk about energy, what are we talking about here in your view? Natural gas, oil, coal, or are you adding nuclear into that mix as in
absolutely,
uranium?
all of them. Look, the complications that we've added to the energy distribution system are all in the midstream. It's the shipping. Those costs have to be borne. Like, when they sanctioned and they said, look, we're not buying any Russian oil anymore. All of a sudden, the world needed 30% more oil tankers than the world had, simply because of the length of a voyage that these ships that used to make the the 2 week coffee and cake run from Oosterloo to Rotterdam and back again. Now they're having to go to at least to the Bahamas, reblend the oil with somebody else's oil, and then ship it back to and then bring it back to Rotterdam. Or those same ships were then transporting the oil to a VLCC, like from a small Aframax to a VLCC, and then that VLCC has to go to China or India. And it's not like that transfer process doesn't take any time. It's not like like this is all of a sudden all of a sudden we had this massive need for more oil tankers in an environment where it was now a hell of a lot more expensive to build a new oil tanker, because now interest rates are not on the zero bound anymore. So it's why you've seen shipping firms, like I've been in midstream. I've been in a couple of midstream firms that did bang up business starting in 2022. Stock prices all doubled, tripled. They changed their business model. They, like day rates have gone up. In general, they're not like they don't go up in a straight line or anything, but they went up and they're staying up and they're not backing off. You go to the Fernley's data and it's like it's very clear when you look at it, right? So, that's not going to change because the credit environment for new builds and ships isn't good. So the shipping industry itself is already once bitten twice shy over another boom bust cycle in this stuff, because the sanctions could go away tomorrow, and then all of a sudden there's a glut of ships on the market. So no, like I don't see the shipping industry like going out of their way and go, ooh, there's a new bull market in Aframax or VLCCs or whatever, and we're like going out and building a whole bunch of them, right? Companies like Keppel and others that do all the shipbuilding, right? Like I don't see people screaming on CNBC that we should be buying, Singaporean shipbuilders or anything, right? Like, no, because they're not going to. And I don't see the shipping MLPs ordering new ships. I don't see, not in the way that you would think when you see day rates double, right? Yeah, I mean, it may have been a small uptick, but nothing crazy. Maybe they'll add another 5, they'll mostly just do replacement and maybe a 4 to 5% expansion, but it's not like it's a huge, it's been a huge boom in shipbuilding to get around this. Now, I think they may be wrong about the complications within the oil shipping industry being temporary. I think these may be a new permanent feature of global shipping and oil going forward. And because of that, that's why there's been such a strong bid under the price of oil, why they couldn't get oil prices back down into the 60s, even though they tried desperately. I'm talking Brent crude here, not WTI. I don't know. Like that's the way that's the way I analyzed it all through 2022, 2023, and now into 2024. And I haven't seen the dynamics shift at all. So
oil seems to be in the short term, though, obviously going through fluctuations. And now with this ceasefire brokered by Egypt and Qatar, do you think oil keeps heading lower for the duration of 2024, at least over the short run?
No, I don't think that at all. I think oil's already too low at $83 a barrel. I think it's just basing. I think the big victory here for quote unquote Europe was getting the euro back above $1.07 and oil prices down below 90. Okay, I mean that they're holding that together for so that's this week. Talk to me at the end of the month. Where's the euro going to be at the end of the month? Where's oil prices going to be at the end of the month? Until we haven't seen a real, honest to God technical signal. While we're sitting here chatting, I'll go pull up, my monthly chart of the 5-year chart of the Brent futures curve and see what I got here. But all I see is when you look at a 5-year chart of Brent crude, okay, so you're going to need a close this month below $81 on Brent crude to even consider a move back into the high 70s. But I think oil is now coiling on a monthly basis. It's just coiling, and volatility is beginning to dampen down. And as it starts to dampen down, eventually it's going to make a move. And if I were to read this chart, Oil is now trading at its long run average true range of about $83 a barrel, and I would expect it to go higher rather than lower. Do I think it's going to go like ballistic to 150 or something like that? No. Do I think it's I mean, unless we have the advent of like a major world war, then yes. But the Houthis are winning the war on the open seas in, around the Red Sea. They're, for whatever reason, the United States refuses to wipe them out, even though we're probably more than capable. I'm not one of these people who doesn't believe the United States has no ability to to deal with the Houthis, shooting missiles at ships or flying drones at ships. I just don't believe that. I'm not, I'm not. I'm just realistic about these things. We have weapons we haven't that no one the world hasn't seen yet, and the Russians have weapons that the world hasn't seen yet, and the Iranians have weapons that the world hasn't seen yet, and so do the Israelis and everybody else. Like it's always that game of how much do you, whenever you see these conflicts, it's always a question of how much are who whoever lost is the one that showed more of their hand technologically, because that's what these dust ups are always about. They're about getting real world data on the effectiveness of weapon systems in order to then sell them into the open market and blah, 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 blah. And so that's part of the reason why these conflicts always seem to be eternal, even though we all want peace. And that's the military industrial complex angle on all this stuff. Okay. And it's really not much more interesting than that. They just want to sell more guns. And it's not because they have some, grand plan for global domination. No, I leave that to the ideologues in Brussels and DC and, city of London and maybe even Beijing to a greater or lesser extent. So, and everybody else is just trying to, keep their heads down and get work done.
Hmm. But so you don't think that the lack of desire to, as you put it, wipe out the Houthis, you don't think that's related to oil prices right now?
Oh, I do. I think it absolutely is affected by oil prices and the presidential election in the United States and everything else. And that's maybe one of the reasons why we don't see the Biden administration taking that route. Taking that tack. There may be other reasons as well. I mean, and then we start getting into stuff I think that's beyond the scope of the conversation you want to have. Let's just let's just be blunt about it. You don't want to have that. You don't have the potential conversation about religious eschatology and all the rest of it. Suffice it to say that when it comes down to it, it's all about, at the end of the day, the maritime trade routes around the Middle East are key. And, someone is vying for control of those things. And there are multiple factions that want to win. And they all have different agendas. And in the past, they've looked like they were all on the same side together because on other issues, they are on the same side. For example, all of the factions involved here hate Russia. But that doesn't mean that you can transfer their hatred for Russia, their mutual hatred for Russia, to an equal extent to their same agenda over how the maritime trade routes around the Middle East, how those fall, over the course of the next decade or two or 5 or 20 or 10 decades. So those are two separate issues. They're related, but they're not the same. And everybody, on certain things, these people agree. On other things, they do not. And it's very important to remember that, everybody, if you put everybody's wants and everybody's needs on a whiteboard and look at them, there's going to be overlap and there's going to be differences. And those overlaps are meaningful, as are those differences. It's not all just one big club and then we ain't in it with one big overarching story. The question is, which one of those things is the most dominant in any one period of time? I think is probably the best way to look at it. So, again, I don't always have a clear picture on all of this stuff, but when I do a reductionist analysis of who the prime movers are for the behavior that is the most dangerous to all of us, meaning the normal everyday people across the world in every one of these jurisdictions that just wants to go to work, raise a family, heat their homes, feed their kids, have a good life, go to their softball games or their soccer games or their hockey games or wherever they're from, do the thing that we as humans want to do. Well, there are plenty of people out there that want to stop us from doing all of that because that normalcy is now a threat to their rule. And we have to come to grips with that. And we as people and as investors, we have to come to grips with that as well. That those are right now probably more important than, whatever the latest, sum of parts analysis or discounted cash flow analysis that a bank does on a company's on a company's balance sheet looks, a company's business model looks like. Like I read these, I used to read a lot of bank reports on stocks and whatnot. And I would read these things and I'm like, well, that's cute. You did a discounted cash flow analysis of, say, Shell, for example, right? I'm like, oh, that's cute. And they run all these numbers and they have all this stuff and they do a quote unquote SWOT analysis and they miss all of the geopolitics. And like, of all the oil majors, Shell is the most important to look at as a bellwether for the direction that geopolitics is going, because no one has a better handle on being 3 steps ahead of geopolitics than Shell is. That's why it's in my portfolio for gold, guts, and guns. I make no bones about this. I've been long Shell since like 2013, since I first started working for Newsmax. Like it's like, why? Because Ben Van Beurden is one of the best CEOs in the world, period, and has been and will continue to be until he retires. Period. Doesn't mean that Shell's the best oil major out there. It's just the one that dovetails the best with the way I view the world, so that it makes for a very smart play in my mind. By virtue of the fact it's also been a very good investment over the years, and you can't really argue with that either. So
there's a decent dividend yield on it too. I'm looking at it right now.
Always
4% now, but you're right. It always has been.
Always has been.
It's like that meme.
Even COVID, right? Even during COVID, when Shell famously cut their dividend by 75% because they had to, because oil went negative, they used it as a strategic retrenching to conserve cash flow during a disruptive period, right? And they cut the dividend from what, like 92 cents a quarter to like 25 cents or something like that. And then they slowly built it back up. I think it's now back to like 67 cents a quarter. It's like something crazy. Like they're back to like almost back to where they were before. And the share price, by the way, is back to where it was before. Like, or even higher. I think it's actually 40% higher than it was before. And oil is like right at about the same price that it was before. Like they're just an amazingly well-designed company, but they used that time to retrench, pay down debt, improve the balance sheet, all that stuff. And they used the cover of COVID to get around it, to do it. And then they slowly, like every 2 quarters, they raise the dividend again.
It seems that it's actually at an all-time high right now. I mean, it hit all-time high like about a month ago, and it's now headed back to an all-time high again, it seems. So
yeah, $72 a share. I just did it this morning for I just looked at Shell this morning. I was like, oh wow, 72 something a share, paying whatever it's paying, and 66 cents a quarter, and whatever that translates into. And like, and I knew this was going to happen when Shell cut its dividend and the stock dropped into the 30s or the 20s. I'm like, oh my God, this is the buy of the century. And I told everybody that was listening to me at the time. I write 2 different newsletters. I said the same thing to everybody. And every time we talk oil, I'm like, why do we talk about any other oil major? All the other ones are just, like, what's the point? Just talk about Shell. And if you know what Shell's doing, you know what the rest of the industry is probably going to do. I'm not saying there aren't better plays in the oil patch than Shell. There are oil and liquefied natural gas patch than Shell. I'm not saying that there aren't. I'm sure you can probably find a better stock than that one. But from a geopolitics perspective, how they set policy tells you they're almost always 6 months ahead of the curve. Like when they changed their domicile from the EU to Britain, that was a big deal. And now they're thinking about moving it again. Yeah. So
where does nuclear energy come in that entire analysis? Because when you were talking about stuff that humans want to do, it seems like we all can agree on wanting cheap baseload power.
Yep.
Why did we go through this dry patch? And maybe more importantly, why is it becoming more and more popular again? And we're seeing even more political support for it.
It's because, again, I will argue that in the West, we are dominated by the politics of what I like to call Davos. Okay. They don't have enough hydrocarbons to feed Europe. They don't. Even if they were to reopen, the fields off of Scotland and the gas fields off of the Dutch coast and and everything. They lost the coal fields of the Donbass. This is one of the main reasons they're so freaking angry with the Russians. The Russians took all the Ukrainian energy resources in the Sea of Azov. There's a whole lot of natural gas and oil, and of course coal, and the good coal, the high quality coal that's in the eastern part of what used to be Ukraine, and that is now part of Russia. And everybody was expecting all that energy to flow into Europe. The JCPOA was designed to allow France and Italy and others to invest in Iran. That's why the JCPOA was created, the Iran nuclear deal. It was, I mean, that thing was the ink that on that thing wasn't dry. The ink on Obama's executive order wasn't dry before Total had a $4.2 billion deal signed with Iran to develop a couple of blocks off the North Pars gas field, which they then had to sell back to Gazprom after the sanctions went into effect. Or that when Trump put the sanctions on Iran and cut Iran out of the global financial system back in 2018. So uranium is coming back into the mix because they have no other choice, right? Mm. The goal was to impoverish everybody because what they always wanted to do is they wanted to default on the debt of the built up over the last century, default on it, and then open everything back up again, but with a new full total surveillance system and 100% tax compliance and complete surveillance control over the population, so that then they can control everything. That has failed. They're still going to try it. They're still going to go forward with it. They're going to try and there's this weird belief that if they can get any part of this thing continuing to move forward, then that's winning. And that's not. If you get a bunch of tactical wins, but you're losing strategically, that's nice. You're going to get rolled eventually. Excuse me. Like I said, it's really hot out here. So, uranium has to come back into the mix. We saw this report the other day that the German energy ministry falsified the reports about the German nuclear power plants. It was done by, basically it was done by the Green Party in order to advance a particular agenda. We're finding out all sorts of things that they lied to us about. What a shock. They lied about everything. So Germany's going to restart their nuclear power plants. The Japanese are having to do the same thing. I'm not crazy about the fact that they're restarting all these old Gen 1 hot light water reactors. These things are terrible. They're bad implementation nuclear power. But it is what it is. Like, I'm a big advocate for, advanced, for these new Gen 3, Gen 4 reactors. And I'm all for the development of thorium and the uranium-233 cycle as opposed to the uranium-238 cycle. The thorium-232 cycle is really the uranium-233. It's a different process, and it's much safer, much more controllable, and much cleaner in the end because there's no nuclear waste. It just burns everything up. It's like, there's not even charcoal left with it. It's like when you burn wood, there's charcoal left over. Like, you burn uranium-233, there's nothing left. It all gets burned. And so from that perspective, we make the choice not to do these things because there are other concerns that overwhelm the logical choice of just making energy. Because again, it's about at the end of the day, you have to remember that the people that I've been complaining about bitterly, well, I like to call them Davos, who used to call themselves the Club of Rome or this one or that one. At the end of the day, they do not believe fundamentally in their heart of hearts. And until they are removed from the scene, their influence over our policy will not change. And they do not believe that humanity can be trusted with a cheap source of energy, that we are that we are locusts. We are locusts. And we are a virus that will destroy the earth if we are allowed to run wild with access to cheap and abundant energy. Of course, as far as I'm concerned, that's Jungian projection, because these are the people that actually run around everywhere and wipe out the places that they send their money into. They're the ones that act like locusts. They go in, they put their money into a country, they strip mine it, and then when the country's no longer of use to them, they turn around and they pull their money out and they go somewhere else. And the world is getting tired of this, and that's another part of the story. So, Yeah, nuclear is coming back. Uranium prices are cheap, even at what I think we're at all-time highs on, on yellow cake futures. So what? Talk to me when they're $200 a pound as opposed to 80 or 70, whatever they are today. I don't remember. I don't keep up with the uranium price on a day-to-day basis, but I know that it's in a bull market and it continues to be in a bull market.
Hmm.
So
Yeah, yeah, we're not at all-time highs.
mm.
We're not even at inflation adjusted 2007 highs. I think 2007 highs, inflation adjusted would be at around 180 now,
Oh
maybe
wow, okay.
185.
Again, inflation adjusted, certainly. Yeah, you're agreed.
Yeah.
We're not even close to well, then by that metric, how cheap is oil? At $83 a barrel, inflation adjusted. This is part of the reason why I've been saying for a long time that I don't believe in peak oil. I've never believed in peak oil, by the way, because I'm not a Malthusian in any way, manner, shape, or form. I believe that the technology will always find a solution to the problem, even if that solution means that we find a different solution to the problem. That's not oil, right? But inflation adjusted terms, I think oil from the oil price shocks of going back before the oil price shocks of the 1970s today, and adjusted for the CPI in the United States, I think it's up 13% over 50 years. Wow. Talk to me about that price cliff there. Let's just like really, wow, we can't pay, we're not allowed to pay 13% more for our oil pulling it out of the ground than we did 50 years ago. Like, really? Really? That's an oil apocalypse. That's like why we should all, you know, not bathe. Because now they're telling us not to bathe because we can't afford oil, we can't afford hot water. Like the sun's shining every day. Last I checked, we can put a hose on top of our house and get all the hot water we wanted. I live in Florida, for Christ's sake. If I want 180-degree water, all I got to do is run 200 feet of hose and leave it on top of my porch that I'm sitting on. And by 3 o'clock in the afternoon, I'll have 40 gallons worth of, 180-degree water. It's not hard. Like, I don't need to not bathe.
Hmm.
I think we should all just put our pants back on and stop lighting our hair on fire.
Yeah. Stop shaving our armpits too.
Yeah, we
Anyways,
should do that. Yeah. Yeah.
what's the relationship to this Russian uranium ban then from last week?
That's about setting the stage for what's coming in the United States, which is that the United States is retrenching. We're going to develop our own. We're now going to finally start really developing our own natural resources, and we're going to, we're going to die. The world is bifurcating. The world is breaking up into economic blocks. My friend Vince Lanci is absolutely right. He calls it mercantilism, but we're breaking up into regional blocks. The United States is part of this process, and we're retrenching, and that means that we're not going to buy our uranium from Russia anymore. We're going to develop it ourselves. It also means that you can bet that at some point in the very near future, if that's the case, that we're going to have to then fast track the development of uranium mines and uranium processing facilities here in the United States and or Canada. And I fully expect that to happen. Okay. All of a sudden, all these environmental concerns will go right out the water. You wait, Antonio. This is something. You want to signal for that you can really like hang your hat on, especially as an investor. Watch the Supreme Court decisions around what's known as the Chevron deference, where the Chevron deference is part of a Supreme Court case in the 1970s, which gave the agencies like the DOE and the EPA and whatnot the power to basically write the rules that on what best practices should be that Congress will has effectively rubber stamps. That Congress basically took out of their hands, said, look, yeah, we'll just let the agencies make these decisions because we're not smart enough to do it, even though they're supposed to, and that's their job. And then the Supreme Court held this up in what's known as a very famous case, which now today is known as the Chevron deference. If the Chevron deference falls to this Supreme Court, it'll be more monumental in American politics than getting rid of Roe v. Wade or reaffirming the Second Amendment or anything else along those lines. Because what that will do is that will take the power away from the agencies to set policy for the entire country. It means CAFE standards for how, for mileage, corporate average fleet economy for car manufacturers will go away. It means that the EPA will no longer be able to outlaw gas stoves or this or that or any of these other stupid, insane things that we've seen come out of the Biden administration's mouth over the last 3 years. All of that will end, and Congress will have to legislate and there won't be the political capital or the political environment for them to legislate this stuff and put it back in place. What will happen is that it will all go away. So if you want to see whether or not the United States is going to sink into, clown world depravity or not, it's going to be over the Chevron deference. If the Supreme Court continues to defer making that judgment, and there are a couple of cases that are on its docket that it keeps pushing off for political reasons, that if that falls, or if it doesn't ever fall, and this continues, and we get Biden, quote unquote, reelected in the fall, not that I believe that Biden will ever be reelected, not that I think he was elected in the first place, then that will put the United States on a path towards a breakup in a way that, I've been fearing for a long time, which will have immense secondary, tertiary, quaternary effects on the bond markets, on this, on that, capital. Again, it's a 3-hour podcast just to go over those effects. And I've talked about it a little bit. I've talked about it on 100 different podcasts. I talked about it with my patrons for years. But in terms of why would the Chevron deference go away? Why that not going away would be one of the triggers for a breakup, because it would keep the U.S. heartland, basically from Florida to Montana and pretty much everything in between, going from southeast to northwest. That would continue to retard the development of that and of those resources, and that's going to be politically untenable. Okay, it will be effectively no different than the tariff of abomination that fomented the Civil War. What everybody else calls a Civil War, and what we down here call the recent unpleasantness. Okay, there are real significant historical parallels here. Okay, and so we have to keep that in mind as well. I think it's the Chevron deference thing is immense, and I don't talk about it all the time, but it's in the context of the conversation that you and I are having now, it makes a lot of sense to bring it up, because it's one of those things that if you need a thing to watch for, because the headlines are filled on a daily basis that the United States is sinking into clown world, and with good reason, because they're trying to sink us into clown world. But if that doesn't come to pass, well, then, a whole lot of really bad people are just going to wind up in jail, and a whole lot of things are just going to change politically. And the power centers in the U.S. are going to shift from New York and California to, Dallas and Miami. And that's kind of what's already happening. So,
and where does all that tie into what you said at the beginning there of that answer, where you started talking about domestic uranium supply?
right.
Does that make you more bullish on soon-to-be producers, companies that are producing uranium? Are you even looking at that?
I'll be honest with you at this point. I have so much to do just trying to keep up with all the big stuff, right? That keep my head in the story of what's happening at the where the gods are fighting amongst themselves level, right? That I don't have time to go in and dig into individual stocks. Okay. What I do for my patrons and what I do for my newsletter subscribers is I say to them all the time, look, I'm going to pick a stock in a particular field. It may or may not be the best stock in this field. I'm going to put it in the portfolio. The idea here is that this is the theme you want to look at. I bring up the idea of coal. Well, actually, my patrons were the ones that actually brought coal to me, but I bring up uranium. I have us in, freaking URNM, dude. I'm like not going to pick. I ain't picking winners and losers in the uranium space. If you want to pick winners and losers in the uranium space, you go right ahead. You know what to do. I'll teach you how to read a mining company's balance sheet or an exploration company's balance sheet. I'll tell you how to trade it and how to navigate the investment cycle, right? Like you would any penny stock. I'll teach you how to do these things, but I don't necessarily have to give you the best pick. What I have to do is teach you how to assess a particular market. And I have so many patrons that are such savvy investors and, professional traders and this, that, and everything else. So we just talk about amongst ourselves. I have a whole friggin' discussion server for us to gestate ideas. And the whole thing becomes a skunk works of geopolitics, trading ideas, investment ideas, and all the rest of it. And it's an invaluable service to have these people just, have the smartest people in the room all get together and make the room really damn smart in such a way that you wind up not being the smartest guy in your own room, which is where you want to be.
Hmm.
I mean, I
Well,
like not being the smartest guy in the room. I love it. It's great. I learn so much. It's insane. And
yeah.
then I get to be out here and then do the thing where I get to present this, a lot of this stuff as as a as a thing, synthesize it into a coherent narrative or whatever story that you want to talk about, and then from there, do then from there disseminate the ideas and push it out there. But I mean, every good analyst that we follow all have a massive research department behind them. Mine just happens to be crowdfunded. Other people, other people charge more for the service and then have employees that they pay. My people pay me, which is insane. And by the way, immensely gratifying and edifying and unbelievable. I sit here every day going, how did this happen? I still don't even know how it happened. Right? Not to say that I don't bring a lot of my own ideas to the table or anything else. Of course I do, but it's a collaborative effort
Hmm.
because everything is a collaborative effort. Every podcast I go on is a collaborative effort. Hell, I learn things about my own arguments while I'm sitting here chatting with you because my brain gets fired off and the ideas pop into my head, and then we talk about them and we talk through them. And that's how great leaps of intuition are done. Right.
Hmm.
So
That's how I feel. How the hell will that happen? That's how I feel every day when I look at my wife. So I guess I'm lucky. But I also
mhm.
know how it feels when you're not the smartest guy in the room, and there's really only two chairs in my room, and I'm still not the smartest guy in the room. So,
I,
what do you?
wait, stop. One, yes, I feel that same way every time my wife comes home from the pottery studio and we start talking about stuff that's only tangentially um, uh, related to the commodity market. She starts talking about freaking Jungian psychology and all this other stuff, and like, and then I have to like incorporate all that stuff into the mix and like start talking about because then you got this, and it's crazy. It's great. It's wonderful. My wife is an immense source of just great ideas because she's just a she's an immense figure and she's an immense influence on me. And I just think she's amazing. We've been together 32 years, and
Hmm.
I'm happy to be in her orbit.
Congratulations. What did you meet when you were 10?
Yeah, thank you. So you're so kind. Uh, they say telling a woman that she looks younger than her actual age is nice. Like, men aren't aren't immune to that shit either. Oh, dude, I'm 56. Like,
Good.
so.
Good. 68? You were born in 1968?
Mhm.
Hmm. Same age as my mom, actually. So that's a good
Interesting.
thing. Yeah.
Yeah, my mom was born in 33. My dad was born in 28. Okay, like I'm
Okay.
old. My dad was old when I was born. My dad had his first grandchild. Like, like, he was 40 when I was born.
Hmm. But your dad your dad
He
was what,
effectively already
Italian?
raised three kids by the time I was born. What's that?
Was your dad Italian? I mean, did he come over from Italy, or was that before his time?
No, no, Mike. His family did, and then he was the youngest of 11 of a family that came over.
Wow.
Um, my whole family on both sides, all grandparents, all four sets of grandparents came over between like 1906 and 1911,
Hmm.
and settled in New York. Some in Queens, some in Brooklyn. It's kind of like the Montagues and the Capulets, and then um, from there, I'm just my family is old, and World War II had a lot to do with that stuff, and just a lot of it. But my paternal grandparents were both dead before my dad even had his first kids. I think his dad saw my infant oldest sister right before he died,
Hmm.
and that was in 1957
Yeah.
or 58. I don't quite remember if Patty was born in 57 or 58. I can't quite remember.
Still got to be thankful to them, because if you think about, like, my
57.
parents are both born in Bulgaria, so Eastern
Mm,
Europe during communist times. Their parents were born during communist times too, so they had pretty bad lives. I mean, on the margin relative to what I mean, I don't know your entire background, but on the
sure.
margin, like if they were just average, because they were average people in Bulgaria. I mean, we don't come from money by any means,
Right.
lower middle class type of thing, but lower middle class during communism in Bulgaria and lower middle class in the US during those times is completely different. Based on all these
Absolutely.
things that we, funnily enough, have talked about today, I know there's people maybe already clicking away and thinking, what does this conversation have anything to do with it? But it has everything to do with it.
It does.
So. Yeah.
It has everything to do with it because it informs our worldview and it informs how we came to some of the conclusions and what we decided to study in our lives,
Mm.
right? And I think it's important that, again, you can't take the geopolitics or the culture or anything else out of the markets. If you do, you're you wind up being in a very dangerous place where your focus is too narrow, right? You really do have to, take a lot of these ideas. It's like every time we have this conversation, all I can think back to is the great scene in Trading Places where there's Eddie Murphy talking about, the guy coming home with buying buying the GI Joe with his kung fu grip for his kid and blah blah blah. I'm like, yeah, that's what investing is about. Like it is about these things, and you know it's one thing we all just care about making a little bit of money and trying to outperform the market, but really it's about, if you understand the big trends and if you understand the big picture about what's happening, you can almost throw a dartboard in the right you can almost throw a dart at a board in the right sectors and you're going to do well. You may not do the best, you may not be able to measure yourself up against your friend who did slightly better than you because he picked slightly different stocks, but if you get yourself into the even 50% of the time you get yourself in the right stocks and you're 85% in the right sectors, you're going to do very well, and you're going to beat the rate of inflation. You're going to have a real return on your portfolio that's going to well outpace the inflation rate. I don't like to talk, I don't like to toot my own horn on terms of our portfolio's performance, but having tracked it now we just published issue 80, so we're coming up on 7 years doing this, and over that 7 years, running this thing as if we ran a hedge fund with all of these stocks that are ran a portfolio with real numbers, with real position sizes and everything else, with all the trades marked. We have an annualized 6.5 or 5.5, 6.5 year annualized return rate of over 18%.
Mm.
Annualized 18%. Now, are there losers in there? Yeah. Did I make a lot of bad picks? Absolutely. Are there some absolute dogs in that? Absolutely. Are there some unbelievable freaking winners in there? Yes. So I don't, to me, I mean, it's great and it's gratifying and everything else, but at the same time, it's almost secondary, because if you can teach people how to fish and you can teach people how to read the headlines and read the markets, in the end, they don't really even need you. They don't really need your stock picks. What they need is to have you there to help error check what they're seeing and to take out of their hands the anxiety and take off their heads the anxiety of what's happening, so that they can go forward with a clear head where their comparative advantages, which is going to their job every day and making money, which is where their primary money cash flow comes from.
Mm.
Right. And so, if you do those things right, you really can, impact people's lives in a meaningful way. And that's all we're all trying to do here. And, you know, and it's the job. And I try to do it with as much grace and humor and, invective as I can do it. What it comes down to.
And you're doing a great job at it. And I always appreciate these conversations. I see that your cigar is almost a cigar bud right now, so I'll let you. Oh, there's some room in there.
There's about 10 minutes left on this. If you want to keep
Okay.
going until the end of the cigar, that's fine. If you got another question or two, we got time for it. Starting to cool off. We're past the midpoint of the day. So
Good. Yeah. Well, um, again, just going back to the energy commodities and all these things, I'm also thinking about what's your take, if this is your take on where oil and all that is going, and nuclear energy, what then is your take on all the other metals that are
oh,
supposedly behind the green transition, like your lithium and your nickel and your tins and all the other things that are needed for chips and technology and all these things? What do you make of them?
well, I just, in a very broad sense, we had a big wave of commodity cost push inflation coming out of COVID. We then had a big classic kind of pump and dump boom bust cycle. And now we're back down to the markets have actually done exactly what I said they would do, which is they would pump and then they would dump. And if they did dump, they would dump back to their long-term breakout levels. So, for example, something like aluminum, or 250 or two and a quarter a pound in aluminum, well, it used to be the high. It used to be the high. That was like, if it reached that level, yeah, it's probably time to sell aluminum because it's going to go back to $1. Well, then we watched aluminum go, I don't know, what, the $7, $8, and now it's back to 250, and it's building a base at 250 on its way to break out higher than that, or hit a low of like 220 or something like that. And now it's trying to break out above 250. You look at nickel, more volatile, but basically the same thing. Copper, look at what copper's doing. Copper corrected right back to $4 a pound used to be the ceiling on copper. It goes all the way up, comes back down again, putzes around below $4 for, I don't know, a month or two. And now it breaks out, oil corrects, and copper's at 450 a pound. Copper's your canary in the coal mine. Copper is still Dr. Copper. It's still your leading indicator of industrial demand for electricity demand. So yeah, like, yeah, you want to be long uranium? Well, we're going to need copper for trunk lines. We're going to need copper for redoing the grid and for, you know, induction coils and this and that and all the rest of it. Like, it's copper. And there's very little that substitutes out for copper. So am I long industrial metals? Oh yeah. At this point in time, oh yeah. Like, I did a chart read the other day for Vail, right? Patrons ask me, I have an open thing with my patrons on Sunday, on the Sunday market report. I go over and I go over 4 stocks that were given to me by my patrons. They say, hey, could you look at this stock for me? Look at that. And they make me look at everything, like everything from, pharma, basically, little pharma penny stocks all the way to, major large caps, everything to Apple and everything in between, right? I was looking at Vail the other day, primary oil iron ore producer, classic, right? In this space. I hadn't looked at Vail's chart, and I don't know, I couldn't remember the last time I looked at Vail's chart, and I went, ooh, me likey a really strong bottom between 12 and $13 a share, paying a 10.6% dividend in this market. Are you kidding me? Like, yeah, I would be accumulating Vail with like both fists at this point if I were a metals investor. Why? Because the world needs iron. It's not tough. Nothing's changing. Even if even if you don't believe in a global, quote unquote, global expansion argument, fine. Then believe in a commodity cost push inflation environment where it's going to be more expensive to move that iron ore from where it is to where it needs to go to be smelted into steel to do the thing. Period. Like, we're in that environment. So why wouldn't you see, again, if the primary energy is in a bull market, and even if it's a mild bull market, like oil's in right now, oil is in a mild bull market, then everything else is going to have to go up with it because it's oil and or coal and or natural gas and or uranium are all inputs. Like, we lost all of these aluminum smelters during COVID, right? And aluminum smelters, when they go offline, they don't come back. And if they do, they take a year to restart, right? Because it takes forever to get an aluminum smelting pot back up online. It takes a year. I was shocked when I heard about this. I didn't know anything about the aluminum market. Then I started looking at it. I'm like, oh my God. Yeah. And there's a reason why they call it congealed electricity, right? Because it takes a crap load of electricity to make aluminum. We're going to go forward in this world that they want with light alloys and energy efficiency and net zero and even if they win, aluminum's not going back to $1 a pound, folks. You're crazy. It's going to go to 4 before it goes to $1, and it's trading at like 250 or 240 or whatever the hell it's trading at today. Yeah, I'm all over all of the industrial metals. Like, I'm not talking about the exotic ones, which get everybody like, all get their panties in a bunch. I'm talking about, like cobalt or this or that. I forget all that stuff. That's just like thinking too hard. How about lead? How about aluminum? How about tin? How about, all the things you mentioned, copper? Like, plenty of good stuff out there. If you want a headwind for copper prices, it's that, Panama just had an election, and the idiot that, killed the first quantum mine, the big mine for First Quantum, is probably going to reinstate it. So copper prices may attenuate because of that, but then a stock like Franco-Nevada, which was a big investor in First Quantum, will probably bolt to 100. We'll put the $25 that I got slapped with the ugly stick on when that happened. They'll probably go right back. So I think for the Franco-Nevada, for example, I think it went from like 170 down to the 110s. It was even worse tonight. I think it was like a $60 drop. Well, guess what? It's back to 127, and it's probably going to go back to 150 or 160.
Hmm. Yeah, well, that's kind of my approach or understanding of where it's all going as well.
Mm-hmm.
Just wondering how it all ties into the geopolitics of it all, where you have supply constraints and stuff like that. Like for tin, for example, you have problems with Indonesia and whatnot. And I mean, it seems like there's two things basically to look at. There's sort of the macro, the overarching theme, if you will, where long term it's all very positive, but then there's a lot of volatility
Mm-hmm.
in the meantime. And how do you deal with that yourself?
You deal with that by hedging your portfolio properly.
Hmm.
Like you can't you either day trade the volatility, which I don't recommend anybody do, or you pick strategic investments to and you try to be right about your entry points. So you get your entry points right. Right. The key here is always getting your entry points right. Don't buy a falling knife. Wait for the thing to bottom and then start moving higher, and then you buy that. Like let the market confirm for you that the what you think is the bottom is the bottom. Let the market do that for you, and then so this is part of what I do for my patrons, in that I try to do try to use a ruthless technical analysis, and it's not really much technical analysis. It's really just uh, good solid chart reading, candle to candle analysis. And when you do that, you pick your entry point properly, you minimize your risk to reward ratio, and then you hedge the rest of your portfolio correctly with other things in case you're wrong about that primary thesis.
Yeah.
And you're not going to be right about everything. So you do have to spend a little bit of time hedging. So what would you do to hedge that? You being long, you'd be short treasury bonds, you'd be short interest rates because what's going to be, what would be a headwind for industrial metals prices? A recession that's going to cause interest rates to rise.
Yeah.
Right?
Well, wouldn't a recession cause interest rates to drop?
No, no.
Okay.
Interest rates will rise in a recession.
Okay.
That's the thing, right? Because in order to get investable capital out there, the banks won't lend unless the interest rates are high enough. We get false booms when that happens, but the reality is that especially in this kind of an inflationary recession, no, it's going to be we're having an inflationary recession, not a deflationary recession.
Hmm.
It all depends on what kind of recession you're dealing with. We're not talking about a deflationary recession here. We are talking about an inflationary one that will be closer to what's nominally known as stagflation. That's what we have now. We have stagflation now. There's no freaking way we're going to wind up with um, a deflationary environment in that respect. Now, we might wind up with a reorganization. And so what I mean in a commodity environment, you have to ask yourself, okay, so what commodities are going to be hit in that kind of environment? Well, do you expect housing starts to fall? Well, then you should be short lumber. But that doesn't necessarily mean you're going to be short copper because the money might not be flowing into new housing starts because it might be moving into rebuilding the electrical grid or building out industrialization. And then when the recession is over, then you're going to see housing starts. Like money rotates around based on where we are in that part of the cycle. And I don't necessarily know where we are in this part of the cycle. I do know where we are in this part of the cycle. We're in the part of the cycle where it's a loss of confidence in government, which is driving an inflationary environment with higher interest rates having to be the thing that keeps people from jacking out of government debt and into hard assets.
Hmm.
And that's the thing that the governments are facing. This is part of the reason why, it's called gold, ghosts, and guns, dude. It's not hard. Like I
I'll
still
have you
believe
back.
in.
I'll have you back on very soon to talk about hard assets, talk about money,
Mm-hmm.
basically,
Yeah.
real money.
Yep.
I'm kind of splitting the channel now in two, if you will. So I'm doing this each week. I'm doing basically two shows. One of it focuses on real money. You can call it
Right.
real money talks, and then the other one focuses on transition, if you will. So like energy and transition metals type of thing.
Yep.
And so, yeah, we should
As a
definitely do this. This is another conversation in and of itself, I think, where we talk about how does all of this exactly what we talked about today, but instead of the focus being energy, how does it tie into the monetary metals?
Yep, I agree. And as a former chemist, you using the term transition metals makes me very happy. Like
It's
for those
not
of you who are
meant
not
that
chemists,
way, but that would have
I know
been,
it's not, but I know it was a double entendre, and I'm like, ooh, you used the right phrase. Yes, the D block, right? The D block is your friend, folks. The middle of the periodic table is your friend. Yeah, they are
yes.
called the transition metals, by the way.
I
All
don't
that
think anybody, yeah, I don't think anybody else caught that, but it'd be fun. I'm thinking of
I did.
yeah, you did. You did.
I know, dude, I was a transition metal chemist in many ways. Like
Hmm.
that's what I studied. I mean, not, I studied a lot of that. I mean, Jesus Christ, I can get into what I used to do. And like,
Well, you'll
like,
be happy to know that I'm planning on drawing a Mendeleev tel the table right behind me
yeah, there
for
you go. The periodic table is one of the great tools and great inventions of human beings. I'm dead
yeah.
serious when I say that.
No, I
It is
agree.
one of
And
the,
I
it
enjoy
is
looking at it. So I'll make work
amazing
of that
tool. It's an
eventually.
amazing tool. It says so much about how the world operates, but you need to know how to read it.
Hmm. Well, uh I know where gold and silver are on there, and I know where uranium is, so
The D8 metals are the most interesting ones. I'm not going to get too geeky here, but the D8 metals are fascinating, like nickel and cobalt and whatnot. Those are the fascinating ones because the D8 metals, they have very interesting plasticity in their valence shell bonding structures and the types of bonds that they can make because of the fact that they've got there's eight valence shell electrons, and that makes it a very interesting problem. I don't want to get into it here, and I'll probably like screw it up, and my research director will come in from college will look at me and yell at me, because I'm a little out of practice on this. But like nickel and cobalt are fascinating metals, just to study. They really are. So it informs
um
all of their alloy properties and all sorts of weird stuff, and it's great. It's very, very cool.
this has been a pleasure as always. Thank you so much for doing this. It's Tom Luongo that .me that people can find everything you do online and they can take it from there, I suppose. What else? What else am I forgetting here?
My the my obnoxious Twitter feed, TFL 1728. If you want the worst version of me every day, it's guaranteed to show up. And of course, Patreon/Gold Guts and Guns, where you can sign up if you want and do the thing and become part of the community and be and get more of this on a weekly basis. I'm not sure if that's what you want, but if it is, you can start at $4 a month and work your way up if you want.
Good. Yeah, well, Tom, your cigar seems to be at its end. What do we call it? I need to get some cigar terminology in me if I'm ever going to grow up, although I doubt it. But I'll let you get inside now. It's been a pleasure chatting as always, and hopefully I can indeed get you back on soon to talk about gold. I know you're passionate about that, obviously. So, anyways, I'll let you drop off now, though, as I'll be moving on to the CEO barbecue portion of today's transition talks, which is shorter than usual. It's only one company because literally three other companies had to cancel their interviews, which I'm going to try not to get angry about, although I already am a little bit. And hopefully this one's going to show up. Just kidding here. But back to normal next week with more companies. And of course, as always, fair disclaimer and honest confession before we move on. Here at Resource Talks, we're not like other channels. We try to be different by not hating you. It's kind of hard, I know. But what that means specifically is that I would like you to be aware of the fact that although this specific company has not paid me for the production of their interview, they and other companies, they typically do have active marketing campaigns out there. This and other channels who interview CEOs, we earn our money by offering uh, services. So charging for content creation and publication services. We to make these interviews and publish them on the channels. That's what we charge for. Although I don't make buy or sell recommendations because there's a clear conflict of interest in my opinion, and also because I have no idea what I'm doing. Many other people out there do make buy recommendations because it can sometimes result in the companies paying them more. So just please be aware of that. Anytime you're watching any type of company specific content out there, and just approach this and all other channels, all other content who publish, similar content. Just approach it with a dose of skepticism. That's all. And although I try to ask some decent questions whenever possible, whenever I know what to ask, and I also don't share the questions up front. No questions are off the table. The companies get no say in what ends up in the final video, which is actually oftentimes the reason why companies cancel on me or don't want to show up on this show. Even though that doesn't happen here, these things should still be looked at as advertisements and not as research. Research you do by reading a company's official filings. You read the MD&A, you read the management information circular, you read the financial statements, and you read the technical reports, the NI 43-101s. They're all obviously available on setterplus.ca, which is the government official website. So don't look at these things as research. Least of all, look at them as recommendations. Okay, they're not recommendations. None of us know what we're doing. Otherwise, we wouldn't be making videos for companies. We'd be trading their stocks for a living. In addition, again, these are forward-looking, general, and impersonal conversations about future events that may or may not take place, depending on many, 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 many different factors, including the weather. But so typically, well, sometimes within, but also sometimes outside of the company's controls. So be aware of that, and please talk to a professional investment advisor before burning yourself, and please do more research before taking any decisions. Again, by visiting setterplus.ca, where you'll find those official filings that I was telling you about. These are the disclaimers. There's something on your screen right now. Pause it, read it if you don't losing money, and just be careful out there. But with all that said, though, I'm going to be traveling to the U.S., where I'll be talking to Michael Collins, the CEO of Nuclear Fuels, a uranium ISR explorer co. The company is listed as NF. That's it. That's just 2 letters, and an F on the CSE in Canada, where I can see an average daily trading volume of about 100,000 shares and a 52-week high of 100 cents, which to normal people is known as $1, and a 52-week low of 24 cents, with a market cap of about just under $30 million and about 60 million shares outstanding. Today, this is a 50-cent stock. 7 million warrants and 3.7 million options added to that shares outstanding results in 71 million fully diluted shares. It'll make a little bit more sense in a minute here why, but Encore Energy Corp, who I interviewed a few weeks ago, owns over 18% of the company, and management owns about 8% of it. Looking at the last financial statement, which is dated December 30, the company had about $1.7 million in current assets, most of which, so 1.2 million to be specific, in actual cash. There's no long-term debt, but there are current liabilities that were recorded at about $700,000 at the end of December last year. That same statement tells me that NF spent about $96.5 thousand per month on administrative expenses over the last 9 months of 2023, whereas about $405,000 was recorded as exploration and evaluation expenses per month on average, mostly spent on stuff like geological consulting and workers and whatnot. And about a quarter of it was spent on drilling the KC project, which I'll tell you more about in a minute. Based on that rough calculation, the company was spending, call it $500,000 a month in total over that period on both activities. So administration and exploration, about 20% of which was spent on administration, 80% was going into the project. As always, though, 2 things. This is only a snapshot in time that might not be representative of the full financial picture of the company by the time you're watching or listening to this. And also, this is a non-revenue generating company that is actively exploring its project. So financials will differ from quarter to quarter, from month to month. So if you want to understand what's going on here, which you definitely should, please head over to the company's website as well, setterplus.ca, both of which are going to be linked down below to look at the numbers yourself, especially because in addition to what I just told you, a 6.4 million Canadian dollar bought deal financing was closed earlier this year. So stuff like that change rapidly with companies like this. Yes, financials are the most fun that you can have on a Saturday evening, but it's not the only fun we're having today, because we're looking for uranium in the US, or at least Nuclear Fuels is. Their primary guess as to where they can find that is the KC project, where about half of all exploration dollars were spent, according to that last financial statement, but I promise no more financials. KC is located in the PBR, which is Wyoming's Powder River Basin. And now this land package covers about 30 miles, which would be 50 kilometers if we were to use the correct metric system. This has, of course, been looked at historically. Over 3,800 holes have gone into this whole land package that was, by the way, before this has never really been controlled by a single entity. This is the first time that it is the case historically. That drilling back then was focused on only about 10% of the total package, and it confirmed uranium mineralization was present in the sandstones there, starting at about 200 feet and extending beyond 300 feet of depth, and ranging between about 0.1 to 0.2% of U3O8 over relatively narrow, so that'd be 2 to 7 feet intercepts. Now, As I mentioned earlier, there is an Encore Energy relationship here as well. So the KC project was actually vended into this company. And Paul basically still retains well, not Paul, but the company still retains a back-in option here for 51% ownership, where if they like what they're seeing, they can choose to pay 2.5 times the value of the exploration costs incurred by nuclear fuels on this project. And then Encore will also have to carry it to production. That only triggers if nuclear fuels can come up with a 15 million pound compliant resource, something we're definitely going to discuss later on. They're Nuclear Fuels is trying to do that with an ongoing drill program as we speak, that was intended to be 200 holes. So they're right now following up with 111 holes in a phase 2 drill program, following up on 89 holes that were drilled during the phase 1 drill program, with some of the latest grades showing a headline grade of 3.5 feet of 0.14% U3O8 from a depth of over 400 feet. That last one was. In total, the company plans on drilling again, as I said, 200 holes here. So the phase 2 program that is expected to get them to that number is now ongoing as we speak, and it's focused on expanding historic mineralization, specifically with the idea of finding something that would be amenable to in situ recovery, ISR, as I said at the beginning, which is the same type of mining that Encore has going on right now. There are 2 more projects in Wyoming, but again, that's not really where the focus is, or was, at least over 2023, as only a little bit of money has been going into the company's other projects outside of KC. And Lab or LAB is located in Canada, in Labrador, which is, I hope, where the name comes from. And it's actually a rare earth elements project that maybe doesn't fit too well in this portfolio, which actually, this is also where well, almost half of the money went into last year. But this actually might be a good, interesting starting point here, Michael, because you spent almost $2 million on the lab project last year. But as far as I understand it, it's not your main focus. You want this to be a uranium exploration company. So what's the plan there, and why spend so much money on it last year?
Good day. That is a very good question. We have been excited about Labrador, and when we started the company, we actually started with Labrador as that was our cornerstone project, and we see the opportunity there for both high grade uranium and also very significant rare values as well coming out of that. And it's in a rare district, so there has been a lot of development there and an understanding of the rare potential of that project. But we've kind of backed off of that because we've looked at it, and our main shareholders really are indicating that they want to see uranium developed in the US. So it's one of those things where you've got a good project, but it's just in the wrong place. So at this point, we're really looking to find a new home for that, and hopefully we will. But we think it's got a lot of opportunity.
What does that look like, a new home? Like if I came to you and I was like, Michael, I want to have my own uranium company. What do you want from me to give me that project?
I think we actually really do believe in it. So we'd be looking to do a joint venture and perhaps a retained interest in it, something like that. And if there are people who are watching who are looking for uranium projects, this might be one for you. Yeah, we've seen grades up there historically of up to I think 6.7%, and our work last year returned perhaps, I think, 3.2% uranium from sampling there. So there is a lot of potential for it. It's relatively early days in terms of the uranium exploration on the project, but there are really good grades and potential. So it'll work for somebody, and hopefully we can value that and turn a profit on the trade.
Right. But if this was, when did this become the plan? Like after seeing what you saw from last year's exploration, or where's the plan before that?
The plan really evolved as we were going public, and we were just getting feedback. We were moving forward with exploration because it's summertime. We went public last July, so we did have a little bit of exploration going on in the ground at that point. And while we were in that process of going public, doing the exploration, we were getting feedback from significant shareholders saying, "Oh, we really think the ISR is a story that you need to tell." So we continued with our program to operate that effectively and efficiently, but really the market focus has been around ISR.
So why keep spending money on it then at that point, or was the spend already done at that point when you
There
realized
was a
that?
fair bit of it was spent at that point, and then there were also some claim maintenance obligations within the agreement. So you want to do that. We've done a little bit more as well this winter for some specific targets. We've actually used some pretty innovative exploration techniques there. One of the interesting things, we all fly airborne radiometric surveys and things like that, but you don't get a whole lot of detail from that. So one of the things that we were doing this winter was actually doing snow machine based radiometric surveys. So you've got a little bit more cover with the snow, and that differentiates the different types of radiation you're getting. But it's very effective and efficient for identifying anomalies. And I think we've identified a few things that'll be interesting. We'll hopefully have results from that in the near future.
Okay. So when doing a JV, that will be something like an earn in JV with an option payment on top of that, I assume. Because
Yeah,
I mean,
that sort of thing. Yeah.
This $2 million has to basically come back to Nuclear Fuels shareholders while spinning it
That's
out.
what
And
we're
then
looking for. Exactly.
Yeah.
Right. Yeah.
Okay. So you're not spending any more money on it this year then?
No, we don't have any plans at this point. No.
Okay. It's only KC this year that you're spending money on.
KC, as you described, is our cornerstone and main focus, but we will be looking to permit drilling both at Boot Heel and Moonshine, hopefully. So we're working to follow up, and there are historic resources on both of those projects, and we think it would really add value to the company to bring them into current status. So,
Okay. Is it permitting this year, drilling next year, or are you hoping it'll happen within 2024?
we're a little under the gun in Arizona in terms of studies that have to be done in the springtime, but it's my hope that both of those projects will be ready to drill this year. Probably sequencing Boot Hill would be easier to work on in the summertime and the fall, but in Arizona we could obviously drill 12 months a year, so it's a little bit easier to drill there. So that one we would probably do at the tail end.
I know KC is on what you would call essentially private land, so it's easier. It's not BLM. What about the other projects? What kind of permits do you have to get there?
So again, we've got a combination of private. So I guess about 95% of the land in at KC is either state land or it's private surface rights. So we need to get surface use agreements with the landholders. Boot Heel is very similar. So there's a lot of flexibility there in terms of how and where you can drill. Arizona is a combination of BLM surface rights, private surface rights, as well as some 2 state leases. So it's not quite as good an environment to drill as we have in the Powder River Basin at KC and Boot Heel, but it's still pretty good. There's some flexibility there.
Okay, good. I do want to talk about what exactly you're doing at KC, but let's maybe talk a little bit more about this deal with enCore here before we get into that, because there's basically 2 things that I want to understand. First of all, the incentive of that deal. Bill Sheriff is a chairman of both companies, so of yours and of enCore at the same time. So when the time comes to potentially exercise this option or not, will he be acting in the interest of Nuclear Fuels shareholders or enCore shareholders?
I think I don't want to speak for enCore, but they've demonstrated they have a real drive to develop production, and they're very opportunistic in securing assets like the Alta Mesa Mastenia project in Texas, where they see the potential to build their production pipeline. And I think if we can demonstrate a robust resource, and the cutoff for that is 15 million pounds at KC, that they would be very interested in that as being an addition to their pipeline. Powder River Basin's a great place to permit and develop. We're just off the highway there, so we've got super great infrastructure for a Powder River Basin project. So we are really, I think, well suited for, and the reason why they kept that back in right. If I step back for a minute, Encore, if you look at their track record, they've done a number of divestments of assets. Casey is the only one that they've bothered to put it back in right on. So that's and the reason why they divested it is because they want to be seen as a developer, not an explorer, right? So, or a producer, I guess, as opposed to an explorer. So whereas we are an explorer and hopefully a developer.
But what's and again, I'm trying to understand, the potential for a conflict of interest here and how that would be managed. So yeah, maybe expand on that. Like how are you going to manage that?
Okay, so that really when we reach that trigger point, I would go to the board of directors and say, hey, we've identified 15 million pounds of indicated and inferred resources. We'd like to now take this to Encore, and as part of that, Bill Sheriff would excuse himself from that discussion. So he would leave the meeting at that point. And on the other side, when they received our letter of notification of the resource and triggering the earn-in or buyback portion of the agreement, he would have to recluse himself from the Encore board, and it would fall to the other members to make that decision. So that's sort of corporate governance. It's pretty clear cut.
Okay. Yeah. Yeah. Well, that's exactly where I was going with this, because it's not as clear cut by just looking at the presentation. What was the reason behind you doing it that way instead of doing it just, traditional JV or an earn-in JV, where you just earn in your 49% into the project?
I guess, excuse me, there aren't a whole lot of investors out there who want to see a company earning a 49% interest of anything. Investors really want to see us controlling the asset, and if we're losing control of the asset, they want to see a big payback on the other side of it, and that's what this deal allows for: significant payback in exchange for the 51%. So, I think the most. Sorry, go ahead.
No,
I was
you
going
go
to say the most interesting aspect of the 51% earn-in is the 2.5 times exploration expenditures dollars being returned to nuclear fuels. Is that, I've seen a number of deals where people have like, hey, look, we've got this carry to production. It's like, well, yeah, but how many years are you going to have no money and no one caring about what you're doing? Because if you have an earn-in, or if you have a financed portion of production on a operation, no one wants to see you dilute their existing stock position. So if you raise $5 to pay your stock exchange fee, they're very angry. But if we have received back 2.5 times the money that it took to identify a 15 million pound resource, that gives us the money to cover G&A, but also be relevant, maintain our relevance as an exploration company, building additional resources, giving people a reason to actually hold our stock while they wait for production to begin. So that's sort of the secret sauce in this whole deal.
But would you keep holding this project as it is going into production, or would you seek a sale of that 49% potentially into Encore?
That certainly is a possibility. It's a little far down the road to look at that, and it would really depend on valuations of the project and the company as a whole. And yeah, so it certainly is an option though. Yeah.
I'm also wondering about efficient exploration here, because you mentioned big payback, 2.5 times your exploration expenses. But if you can, and I'm obviously just giving this an example, I know it's not possible, but let's say you find and define 15 million pounds of uranium for $1 million. Well, you really only get $2.5 million for 51% ownership. You're almost incentivized to go and spend 15 million on finding that 15 million pounds, right? So in that case, you get way more than that. You get 37.5 million, right? So it's almost like it almost feels like you're incentivized to be less efficient. Am I seeing that wrong?
I can see your perspective on it. It's an interesting perspective. I hadn't really thought of it that way, but I guess the other side of it would be time is money for all of us. So if we're spending more money, we're also taking a lot more time to identify that resource. So target is to get to the resource as fast as possible. Um, and also demonstrate that we're efficient and effective as an exploration co, because that's what's going to drive our market value. The other side of it is one of the other pieces of math that will be done is the cost of buying a 51% interest in a specific project versus the cost of buying an entire company.
Hmm. When you say fast as possible, what is possible in your case? Like what's your internal, or what is your good feeling? How quickly do you want to get to that 15 million pounds?
That's a very difficult question, and I'm I'm reluctant to say, oh, it's going to be 2 years or 3 years or something like that. Um, Simply because sometimes it doesn't go as quickly as you want it to, and then you've kind of created this expectation in the market. Um, but I think we're looking for relatively near term decisions on these types of things. So
Well, if not in years or months, maybe you can talk to me in terms of meters or well, feet in this case. How many meters do you think you have to put into this project before you can realistically come out with a decent resource?
well, I think I guess one way to frame it would be that we're in the process uh, of we have applied for a new drill permit or an amendment to an existing permit, which will have 600 drill holes. And we would like to see within that 600 drill holes a very good understanding of where we are at and where we're going to find the specific pounds, um, and be able to move forward and delivering. We're moving forward on that next year to really um, get to a detailed point saying, okay, this is what it looks like, and this is how many drill. Like next year, we should have a real good idea of what it's going to take.
How many meters are you going to have into this yourself by next year? I mean, you want to have 200 holes completed. What's the average depth?
Our average depth is let's see here. What are we doing? 5 by 3, 6. We're doing about average depth is about 530 feet, so call it 200-meter drill holes, not 200, 170
Hmm.
meter drill holes, thereabouts. So yeah, it's not that deep. The interesting thing about uranium exploration in sedimentary basins is that it's actually quite inexpensive. We've calculated our costs from planning, geology, actual drilling, gamma log assaying, and remediation at about $60 US a meter. So
Is that a meter or
a
a
meter.
foot?
No, that's a meter.
Okay.
Okay. So it's a very
Okay.
different number than what you're looking at for core recovery in the Athabasca or even reversed air blast
Hmm.
drilling in harder rock in places like Utah and Colorado, because we're using rotary mud drilling, which is very much akin to water well drilling, um, and it is incredibly cheap in comparison.
Okay. Is
So
that all in $60? Assays, everything, camp, food,
that's
toilets.
that's correct. So we don't actually have we use gamma log assay, so we're not doing chemical assay.
How
So
come?
we actually run a downhole gamma logging unit with also with SP and resistivity, and that gives us a calculated um, equivalent uranium grade over footage, over tenths of feet. And that's how we do our assaying. So we get it relatively quickly. We're looking at getting gamma log assays on the same day. You know, the drill rig pulls off of the hole and the gamma log truck backs up onto it. So we get relatively quick return on our grades, and also instead of waiting for 3 months, it's sort of the same afternoon, but it's also a lot more cost effective.
What's the catch? I mean, is it, there should be a catch. It's cheap and quick. And so what's the third thing that it cannot be?
Well, it's an induced, or it's not induced, I'm sorry, it's an inferred assay based on the radioactivity of the daughter products of uranium.
Okay.
And one of the things that can happen in sandstone hosted roll front deposits, by their very nature, the roll front is a supergene enriched zone within the sandstone. And it's basically oxygenated water, meteoric water, rainwater comes in, and it mobilizes the uranium, and it moves through the aquifer, as water will move through an aquifer naturally anyways, through the sandstone member, and eventually it hits a reducing environment and it deposits there. And but it doesn't deposit there forever. It might deposit there for 1 million years, and then the boundary between the oxidizing water and the reducing water moves a little bit.
Yeah.
And as it moves, the uranium is remobilized, and it might be moved another 5 feet and deposited again, or it might be moved 10 feet. So you have a situation where the daughter products that are produced by decay of uranium are out of equilibrium with the actual uranium concentration. So sometimes you can have a little bit of an offset in your deposit location. And that's a bit of an issue in terms of truly understanding where your deposit is. But it actually, in terms of contained pounds of uranium, it's a moot point because the uranium doesn't move that far. And when you go to actually produce the roll front, you come back in and you use a different type of tool to make sure that you're on top of the actual uranium that has been deposited, and that's called a PFN tool, and it's a induced neutron activation tool. So it actually reads the uranium contents of the daughter products. So it's a little bit different, but we don't really have to worry about that. It's a bit more expensive and time consuming, but that's sort of when you get to production, then you're drilling more tightly spaced holes and you use the PFN to make sure that you're right on top of the uranium. But fundamentally, when you do an inferred resource, you can tell that you have X amount of uranium, and unless you're right on the borderline between a claim boundary, and you're 5 feet is going to put you into someone else's claim, then you know that you hold that resource, and it's not a big deal in terms of your overall technical valuation, etc.
And following the agreement with Encore, this has to be an inferred NI 43-101 resource of 15 million pounds. It doesn't have to be M&I.
It's actually a combination of measured, indicated, and inferred. So it's a spread between the three.
What's the spread? Is there a percentage specific thing they have to?
There is. I don't have the agreement in front of me right now, so I don't have the exact numbers. But our initial target, and we do have indicated resources, or historic indicated resources, I should say, at KC already. Our real focus right now is to make sure that we have, or that we build inferred, and then we're going to come back in and we'll layer over to get indicated that we need to a level that we require.
Okay.
So
good. I like how you referred to the uranium not staying there forever, but maybe for 1 million years, because that's what I tell my wife too. She sometimes says, "Oh, when is this investment going to pay off? It's taking forever." And I'm like, "No, it's not going to take forever. It might take 1 million years, but it's not going to be forever." Now, what do you when
hopefully we can do better than that, don't you?
I'm hoping.
Yeah, I think we can.
As far as I understand it, for this to be amenable to ISR, the uranium mineralization has to be basically dispersed through the ore body rather than it being concentrated as if it would be if this was a gold deposit or something like that. So there basically has to be consistency over large intervals, which hasn't necessarily been the case for you so far because you have mostly narrow intercepts, as far as I understand it. Is that because of the method in the way you're testing, or like where's this coming from?
No, okay. So I think what we're talking about there is the thickness of the sands. And you can have some deposits that have 17, and I apologize, but I'm going to talk about this in Imperial because we're operating in the US and all the numbers, the drilling, all the logging, tenths of feet, which is I find really ironic. Anyways, those numbers are all Imperial. So there are deposits where you've got 17 feet of mineralization, but it might be fairly low grade across 17 feet. And what we do in ISR is we actually look at the grade thickness as the viability for production, as opposed to just the thickness of the sand or just the grade of the uranium in the sand. And so right now we're using a cutoff of 0.25. So if you've got 1% uranium and you have, or 0.1%, sorry, 0.1% uranium, and you have 3 feet of it, you'd have a grade thickness of 0.3, if that makes sense.
Sure.
But if you've got, what is it? If you have 17 feet of 0.02, you also have a grade thickness of 0.3. So you can actually have very narrow sand packages and still be able to produce it. And in some ways, it's easier to more efficient to produce a narrow sand package because you don't have to pump as much water through it, if that makes sense, right? Because you've got when you go to production, you basically develop your production wells and then you perforate them across the section of your mineralization, but then you've got to pump enough water to go across that, to move continuously across that entire section. And so it starts to become a question of volume and fluid flow. So if you only have a 3-foot section, to get a flow rate of, let's just call it a flow rate of X across 3 feet, compared to 17 feet, you're going to have to move 5 times as much water to get it across the 17 than you would across 3. Does that work? That works, more or less. Right. So it's cheaper and more efficient because pumping actually does become a significant cost of your production. So in some ways, because we've got narrower intervals, we're in better shape competitively for production.
It's also dry, I assume, relative to, say, the Athabasca Basin.
Actually, these are all below the aquifer surface, the overall water table. And that's important because you want to have confining pressure on your water flow. So you don't want the uranium-enriched waters to be escaping and moving elsewhere in the aquifer, right? I think the sandstones in the Athabasca Basin are more porous. So
does that mean it's going to be harder for you to get the solution through them? Because the more porous the rocks, the easier it is to get the solution through them, I suppose.
Yeah, there is some aspect to that, but I believe there have been 10 historic ISR amenability tests on the KC project, and they all came up positive. We haven't done any yet, but we'll certainly be looking at doing that as well. When you look at, there's porosity and also permeability. So you can have good pore space, but if they're locked on the edges and you can't get water through them. So you want that combination of enough room for uranium to have been deposited, but enough edges that you can push water through it. So you want jagged sands as opposed to round ones, things like that. But it's really, the kinetics of the uranium dissolution vary from project to project. For instance, Boot Heel has a lower average grade than on its historic resources than we do for Casey, but it has way better kinetics. So it might take half the time and half the water to actually produce the uranium, and that makes a big difference when you actually go to production.
Okay. And also low oxidation potential, I assume, to basically make for the dissolution of the uranium in this case, or how's that work?
Yeah, so you want low reductance. You want to have enough reductance, which would be pyrite or carbon, to allow the uranium to drop out and to concentrate at the roll front. But you don't want so much that when you liberate the uranium, it immediately goes back into a nearby reducing sink and goes back out of solution. You want it to go up the pipe. So
Yeah, so you're gonna have to run recoverability tests, basically.
yeah. But again, we do have some historical work on that, and it's come up pretty well. The Powder River Basin is one of the most prolific in situ recovery producers in America. Texas has some very significant ISR resource and production and development there as well. But those are the two main spots for the best locations for ISR.
Okay, because of the well-defined aquifers that you were telling me about that in that case.
Yeah, and there's just a confidence that we're in the Powder River basins. These sands are good. There's an expectation that you'll be okay there.
So hydraulic conductivity, I also wrote that down just to make it seem like if I know what I'm talking about. I don't. But so you do need hydraulic conductivity, basically, as far as I understand. But you just told me that the it's expected that the sands will give you that. What are you gonna?
Yes.
Okay, yeah, go ahead. You can expand on that if you want.
No, I was just going to say, yeah, we do. From what we've seen of them, we're pretty comfortable with it, and yeah, it looks good.
Okay. But then you're also gonna have to probably run groundwater tests to check the pH and the alkalinity of the waters, basically, just to make sure that it's also gonna work with the acid.
So we actually would be just using oxygen as to liberate the uranium from surrounding it's basically a Rhine on the sandstone grains is the uranium concentration. And our focus would be to use oxygen as the agent to liberate the uranium and mobilize it. So we don't look to use acids. They use acids in Kazakhstan, in Russia. They've used them in Australia as well. But and I think there's one permit in the U.S. that allows for acid, but fundamentally, the U.S. has been focused on just oxygen and maybe bicarbonate soda added to just
So
pretty passive.
Yeah,
and it's not that complicated. If it wasn't for the uranium, these aquifers would be drinking water quality. So we're in pretty good condition. There's nothing extreme about it.
I know that basins are kind of hard to define when it comes down to the structural framework here, but what's your internal thesis on the structural controls that are feeding this mineralization here?
So the consensus really is, I believe it's a white formation in the Bighorn Mountains to the west. The most significant potential source for uranium in the basinal systems, at least on the west side of the basin. And then once they get into the sandstones, they're just further concentrating themselves and building that roll front resource. So it's pretty simple in that sense, but no one has really done mass balance and said this is exactly where this uranium's coming from, and here we are now. So.
Well, does that make picking drill targets harder for you, given that you don't necessarily know? Like, if this was, again, gold or copper, and you understand the structural controls better, then would it be easier to pick drill targets?
I've done a lot of gold and copper exploration over the years, and I would actually argue that this is a whole lot easier in the sense that we know the water flow. We're on the side of a base of a sedimentary basin, so the water flow is predominantly in towards the center, or in our case, to the northeast. So we've got a pretty good handle on our flow directions and where our roll front should be. aquifers do pinch and swell as they go along, and you do have water flow that will actually reverse and pick up a different sand and then come back down around. So you do have convoluted nature of some of these things, but we've got a pretty good handle, especially compared to some deposits in the center of the basin where we believe the uranium is flowing and the roll fronts are flowing, and where to find them, how to find them. So
How do you then know when it's pinching and swelling? I assume some type of geophysics, but what exactly?
okay, so it's of the grade is too low for geophysics really to be effective, at least in my opinion. There's been some people doing more work on that in the last year or two, but I don't see that as being particularly effective. What we actually look for is traces of uranium mineralization. The roll fronts form basically a C shape curve, and so you're looking at a sandstone aquifer that, by its nature, because you're focusing and concentrating water, is bound top and bottom by some kind of aquitard mudstone or siltstone. So you have the majority of the water flow going through the middle of it, and you have slower flow at the tops and bottoms. So the roll front, where you're oxygenating the rock, liberating the uranium, is much more advanced in the center. And because it's slower on the ends, you get these little tails. So you have tails that go along, and then they coalesce in the middle to your focus of mineralization. And that's at the center of that C that's your roll front. But when we drill, we can look at it and we can look at our results as we go through the sandstone aquifer and say, okay, the body of this is already oxidized. You can identify it from the minerals that are in the sandstone, which classically would be red. So you got a red hematite iron staining in your sandstones after they've been oxidized. And then you say, okay, so I know I'm uphill because we're looking at a downhill model where we're at the edge of the basin, we're going towards the center. So all the sediments dip to the center. So if I'm uphill, it's red, it's oxidized. My next drill hole needs to be further towards the center of the basin, and I'm looking for the darker sands. And so maybe you drill out further, and you get just a little bit of uranium in the middle of your sands. And you look at it and go, oh, okay, I'm out past my nose. So then you walk your drill hole, your next drill hole comes back, and you try to hit it in the middle of the sea. If you go too far back, maybe you hit uranium mineralization at the top and the bottom of the sand, and you know you're at the tail. So you're basically just drilling to focus in on the high grade nose, as it were, which is my fingers. And so it's not a particularly complicated model. If you're in the center of the basin where the sediments are more flatline, then if you see tails, it's difficult to know which direction the nose, the high grade, is actually going to be in compared to your tail. So it does get complicated, but because we're on the margin of the basin, we have a whole lot more certainty in our direction of search.
So your primary targeting tool is, it does make sense in terms of your primary targeting tool. It just seems to be basically topography, based with the primary and secondary mineralogy that you're seeing, and just drilling seems almost like a tool for drill targeting, which kind of sounds.
Yeah. So, and that's one of the things, because we get our assay results within hours, one drill hole will run several different targets at the same time. So you drill the hole, the drill rig leaves, and it goes to a different target, drives over maybe 500 feet away or maybe a mile away, goes and it drills another hole. While that's happening, you're gamma logging, you're running downhole gamma logging on the hole, and you're seeing, is there uranium? Is there not uranium? You've already looked at the chip samples to find whether it's oxidized or reduced in your target zones. And we generally have a horizon that we're actually looking for mineralization in, right? But the gamma logging will tell you where you are within that roll front system. And then while that other hole is being drilled, you're analyzing, saying, okay, our next hole should be, it might be, 200 feet downstream, or it might be 50 feet upstream.
Hmm. Okay.
So you kind of, and you quickly can zone in or focus in on your actual roll front.
And you can afford doing that because you're drilling for cheap at $60 a meter, is what you told me.
Yep. That is it.
Good. Good. Okay. Yeah. No, that makes more sense. I was just wondering because I was looking for some of the graphics and stuff like that in Unity at least and couldn't find it. But it makes more sense to do it like that. Now that you're explaining it. But essentially, to go back to, so 530 feet, that's 160 meters. You want to do 200 holes, 32,000 meters of drilling.
Yeah, that sounds about right.
Okay.
Yeah.
32,000 meters of drilling.
That's
How much of an
point.
answer, like how far up the answer is that going to get? Because the main answer, the main question here, as far as I understand it, the main unanswered question here is there 50 million pounds of ISR amenable, mineable uranium? If you, recoverable uranium in this case.
Yeah, we've been looking at exploration targeting, and we believe there is that potential. And yeah, that I think is it's a viable target to be chasing. As we go along, we'll validate that. But yeah, I hesitate to say we're going to find X from this many meters of drilling at this point.
Yeah.
But
No, but well, I get that. But so far you've drilled basically, if that's the average depth, about 14,000 meters of the 32. How far up the probability scale is the completion of this additional 111 holes going to get you? As in, once that you have it, you've seen all the results, and you're like, okay, the probability has jumped from say 30% to 35%. Like, how do you see that?
okay, the probability of so I guess one of our objectives this summer is to try to tie the saddle zone together with the spur zone, which we were working on last fall.
Hmm.
And I think saddle has something in the order of 500,000 pounds over a half-mile trend. So that kind of gives you some numbers that you could pull together on that in terms of what that would deliver. And then we're looking to continue to work to the east and expanding the saddle zone off to in that direction, or actually Fort Union and saddle there. So
yeah, okay, yeah, no, that helps me better understand what you're doing in terms of drilling this year and how you're doing it.
yeah.
I think I've been through most of the rocks questions that I had here. I suppose we'll look forward to getting some of these results. How are you going to be releasing those results, by the way? Because you say you get them almost immediately, or are you going to batch them? What do
Yeah,
you
so
do?
we get them immediately, but we want to release them in sort of a coherent package and saying this is what we're delivering. Last year we were just starting off and we were putting out results sort of every week. This year we'll probably be putting results out sort of once a month and trying to encapsulate targets and say this is what we think about this target area and putting them in that kind of framework as opposed to 2023 was more about validating both the historic but also the potential. So those there was more news flow around that, but I think I think we have to be more about target specifics at this point.
Okay. So you're not necessarily guiding any timelines on it or something like that.
No, not at this point.
Okay, fair enough. I wanted to talk to you about the SETI filing. So this is kind of switching the topic here. But I see that Larry has been actively selling shares for the last couple of months. No huge amounts, but it shows up as red on the SETI filings. Nobody likes seeing that. What's going on?
So Larry is I really can't speak for Larry. But I think I haven't talked to him about what his investment strategy is or anything. But I think Larry's kind of perhaps sort of at the end of his career and maybe closing out some of his riskier accounts, perhaps. So it's hard to say. I think you'd have to ask Larry more specifically.
Okay.
So
I'd like to. But what about you? So there's about 8% insider ownership. How much of that is you personally?
I think I've got about 1.4 million shares. They should all be on CDI as well.
Okay. Yeah, I could probably get to it if I scroll far enough. It's
I'm
so
not selling.
you listed it how much? 47.5 cents, is that right?
Sorry.
When you listed the company in July of 2023 or
Yeah, so I think well it was halted obviously. So and then it immediately traded at $1 and sort of went quiet for quite a while we were working on getting our drill permit at KC. Um, our last private financing was at 50 cents. And
okay.
then again, our last public financing was at 60, and that was the bought deal in January.
Mm.
So I think
Yeah,
if
so
you look at the valuations of people in our market, you know, there are some people who are technically underwater, but a lot of them are very much long-term holders. So they're not really looking to double their money and get the heck out. Um, they're, I think 40% of our shareholder base is institutional. Another 20 of it is obviously, or a little under 20 now, 18.3 is Encore. Because they picked up warrants on the last financing, they couldn't maintain their full 19.9. Their 19.9 partially diluted is how they frame that. So if you look at our overall stock structure, there's an awful lot of people who are very long and are uranium bull market believers and are here for the long term. And I think that's a significant difference from other advanced exploration companies who have much more retail in their trade. So, yeah.
but there was no founders round or when raising the capital.
Yeah, I think there was 500,000 shares that were done at 3.5 cents, something like that.
Okay.
So, but yeah, I don't think that's particularly egregious.
I'm basically looking for was it done at a millionth of a penny, for example, or something like that. That's typically what I look
No,
at. So
no,
good.
none of that.
Well, as long as your average cost of capital is not 1 cent, then that's fine. What is your average cost of capital actually?
I think mine is somewhere around 15 cents, to be honest.
15. Okay.
Yeah.
Good. Is there maybe last point, is there a royalty on Casey or parts of it?
There is a royalty on a couple of state sections. So pretty much the whole thing was organically staked, excepting a couple state sections that were optioned, and then the option's been closed with David Miller, who's one of our directors. David was, I think, the only other guy who looked at it and realized that the whole area was actually open for staking, and he got a couple state sections, but we pretty much got in front of him on the staking side of it. So we did pretty well there. But we brought David in, brought his state sections in. I think he has a 1% royalty on those, and he may have a 2% on some of the surface rights around those that were staked after the deal with him.
Does
But
he
it's not of significant consequence in terms of what we're trying to do and where we're going.
does he
So
also
he has
have
an area.
shares that he's bought himself?
I'm not certain if he's bought, or I don't think he's sold, but I'm not sure if he's bought in the market, to be honest.
No, but I mean during the rounds that you were financing and stuff like that, does he I could probably find it if I go through the SEDI here, but it'd be quicker if
Yeah,
uh
no, he wasn't. I think he got a significant position out of the vend of the state sections that he brought in.
hmm,
So I think that's the basis of his position significantly.
okay. Good. Fine. There's been a good overview. I've gone through most of my questions here. What am I forgetting to ask you though, Michael? What did you come here hoping to talk about, but I'm failing to bring up?
I think done a pretty good job of it. I think one of the things we could talk about is the uranium market as a whole, which is a little bit quiet now. Um, But if you look at it, spot prices down, we're, trading spot around 90 from a high of 106. And some people are a little sanguine about that. But I think the underlying thing that people should be looking at is that long-term prices have continued to rise while spot price has sort of pulled back a little bit. And I think anytime you double a market, you're probably going to see a pullback at some point. So the $90 spot, it's a pretty good price, but really the fundamentals of the long-term market are the long-term price, and that continues to rise. So if you pull up those two numbers, that it actually looks really good. So
good. Well, again, my portfolio definitely hopes you're right on this looking good, and I really appreciate your time. Thank you so much for sitting down with me, Michael.
it's a pleasure. Thank you for having me.